So we continue with the admission of the partner with the activity that we're doing. We calculated their profit sharing ratios. We said now the ratio will have 7/35. Ne? We had to convert 1/5 to 7/35. Okay. We had to convert 1/5 to 7/35 to make sure that the denominators are the same. Okay, so before we continue, I would like to find out if there are any questions before we start with journalizing our entries. Are there any questions? Any questions? No questions? Okay. So the other easiest way to do, you can even just take 1/5, ne? 1/5, you multiply with 35 because 35 is the denominator. You will get 7 and then the denominator remains the same. That is another way. Instead of doing the way that I showed you on the whiteboard, you can just take 1/35. You are most interested in 35 to make it the denominator. So 1/5 multiplied by 35 will give us our numerator of 7. Denominator remains the same of 35. So the new profit sharing ratios are 16/35, 12/35, and 7/35. Please, when it comes to partnership, the most tricky thing of partnership is your profit sharing ratio. Calculating your profit sharing ratio, there is no specific way of calculating your profit sharing ratio. There are different ways. So you really need to understand and make sure that you know how to find or to calculate your new profit sharing ratios. So I advise that you look for a lot of activities, you look for a lot of activities and you try to calculate your new profit sharing ratio. Please. If you find an activity that you are struggling to calculate your profit sharing ratio, you private me, I will help you out. But there is because if your profit sharing ratios are wrong, then most of your journal entries will also be wrong, especially with the admission of a new partnership, of a new partner, I mean. The way I wrote partner though. Okay. So let's move on. You don't need to draw up a new okay, let me just draw up a new general journal. But in the examination, you don't need to draw up a new general journal. It's the same. So you just use the same general journal. No need to draw up a separate one. Okay. So let's start. We have the debit. And we have the credit. Okay. So the first thing that we need now, we go according to our letters. Letter A. We start off with letter A. Tebesho must pay 11,760 for goodwill for his 1/over shares in the partnership. Tebesho has to pay 11,760 for goodwill, and that goodwill is to be shared among the partners, among the old partners. We know what goodwill is. Goodwill is is an intangible asset, ne? The goodness of, or let me say the, what is the word? Okay, goodwill has to do with your hard work, ne? Your hard work, or the value, the, how can I say this? I actually forgot the word's name, but okay, the goodwill has to do with your hard work, the good, the goodness of your company. Are we together? Remember the example I gave you of having a house in Klein Benduk, for example. The expensive, it's very safe, the environment is clean, for it, etc. like that. So the price will have to increase. If a person wants to pay your to buy your apartment or your house, they will have to buy it from a higher price than its real value. So if it's valued at 2 million, they can even buy it for 2.5 million. So the 500 is the goodwill. Are we together? So in this case, and we said that goodwill is usually only recognized during when there's a certain person paying for it. So in the admission of a new partner, we are told that Tebesho must pay 11,760 for goodwill, ne? So we need to account for goodwill. We need to account for goodwill of this 11,760, and it should be distributed among the old partners. We cannot distribute it among the new partners. Why? Because Tebesho cannot benefit from the goodwill. He was never there. You understand? He was never in the partnership, so he can't benefit from the hard work of others. Therefore, it should be distributed among the old partners, the other two partners. And also, we cannot include Harry because Harry is already out of the partnership. So we only need to deal with the two partners. We only need to distribute it among the two partners. Goodwill is a benefit. Are we together? It's a good thing. It's kind of like a gain. So we need to credit it to the partners' capital accounts. So we have goodwill. Goodwill of 11,000. We are told that the total goodwill is 11,760. So the goodwill is an asset. Asset increases on the debit side. Therefore, that's why we are debiting goodwill to show that it's increasing. And then we credit our capital account. Capital, Tom. So how much will Tom get? So which profit sharing ratio will we use? Which profit sharing ratio will we use? The profit sharing ratio that we need to use is the one that we calculated after the withdrawal of Harry, which is 4/7 and 3/7. That is the profit sharing ratio that we need to use. So in this case, we have 11,760 multiplied by Tom is 4/7. I hope we understand. So how much will Tom get? What is Tom's share of goodwill? What is
6,000.
How much?
6,720.
6,720. Okay, and then of Dick, which is 11,760 multiplied by 4/7, how much will we get?
5,040.
Where am I getting 5,040?
Yes.
So we get 5,040 like that. Okay. Are there any questions before we move on? Any questions regarding goodwill before we move on to the second letter? Do we all understand?
Yes.
Okay. So we move on to letter B. Ne? It's always good when you're answering these questions, just go according to the letters, according to the additional information. So we move on to letter B. Tebesha will contribute a vehicle to the value of 16,000 as well as cash for total capital contribution. So we need to calculate his total capital contribution. If we are told that he is giving cash of 16,000, ne? What will be his total? What is his total contribution? So we need to take the amount that we are told, which is the 16,000, ne? And we know that that total contribution, but he bought shares of 7/35. So 16,000 we divided by 7/35. How much will we get?
80.
We'll get 80,000, right?
Yes.
So 80,000 is his total contribution. Please take note of that. How do we find total contribution?
Sorry.
Yes.
Sorry, Sarah. And I'm sorry to take you back at goodwill and that dig. Are we not supposed to times it by 3/7?
Yeah, sorry, it's just thank you very much. 3/7. Yeah.
Oh, okay.
Typing error. Thank you so much. Okay. So how do we get our total capital contribution? Because usually you will never get this in most cases. Ne? How do we get our total capital contribution? So if you are told an amount, you are told that, okay, now in this case, you are told that he contributed a vehicle worth 16,000. Ne? And then some extra cash. So you take 16,000, you divide it by his interest. His interest is 7/35. So his total contribution will be 80,000. Okay, so now that we have his total contribution of 80,000, now we are told that out of that 80,000, 16,000 was for a vehicle. The rest is cash. So 80,000 minus a vehicle worth 16,000, how much will we get? What is the total? What is the total cash he needs to pay back? He needs to pay
64,000.
He needs to pay 64,000 to the partnership. So we need to record this. First, we know that our vehicles are increasing. So we debit our vehicles. We got a new vehicle. Vehicle is an asset. It increases on the debit side. Vehicle worth 16,000. And then cash, our cash is also increasing. So in that case, our bank account will obviously increase. Our bank is an asset. It increases on the debit side with 64,000. Ne? Oh, what am I doing? Bank 64,000. And then we credit our capital account. It's his capital, ne? So we credit capital Tebesho. Tebesho. With how much? With the total capital 16,000 plus 64,000 will give us 80,000. Any questions?
No.
Okay. So if there are no questions, we move on to the next letter. If there are no questions, we move on to the next letter. I hope you all understand. Please, if you do not understand, feel free to take me back. We move on now. We are done with letter B. We move on to letter C. Debtors are revalued at 55,400 after the admission of Tebesho. Ne? So here debtors are valued at 16,000. At 55,400 after the admission of Tebesho. Okay, so debtors, we are told that they are 68,000. That is their carrying amount, and then they decreased to 55,400. So did we make a gain or a loss on the revaluation?
A loss.
We made a
Loss on revaluation.
Loss on revaluation. Therefore, it will need to be shared among the old partnership or the new partnership. Do we share it among the old or the new partnership, and why?
New partnership.
Huh?
The new partnership for this admission, for the admission of Tebesho.
Okay, why are we distributing it among the new partnership?
Because the ratio would includes the sharing ratio of Tebesho.
Huh?
I think the transaction says most after the admission of the Tebesho, the revalue of 55,400.
Okay, so when we revalue our assets, when we revalue our assets during admission of a new partner, is it really fair for the new partner to can I say this? Is it fair for the new partner to also gain on the revaluation of that asset?
No.
Huh?
No. It's
Okay.
not.
Just hold on. Okay. So let's read the question again. We are told that okay, Tebesho will contribute a vehicle of the value. Debtors are revalued at 55,400 after the admission of Tebesho. Okay, so the first thing that we need to look at, we said that it's a loss. It's a loss of how much?
12,600.
It's a loss of 12,600, ne? Okay, now in this case, you are told that debtors are valued at 55,400 after the admission of Tebesho. Now let's go back quickly to our summaries of the admission of a partner. Admission of a partner. So it says that first we need to adjust the profit sharing ratio, and then we need to revalue our assets. So let's go to let me quickly just go to the summary of revaluation. Okay. Distribution of where are we? Revaluation of assets. So it says as a new partnership comes into existence on the admission of another partner, it is important to determine the fair values of the partnership equity at the date of admission of a new partner. The underlying assets and liabilities need to be valued to determine the consideration to be paid by the incoming partner and to recognize any changes in the share of equity of the existing partners. Please take note of this. The next thing, the balance on the revaluation account is referred to as a gain or loss on revaluation and is allocated to the existing partners in the existing profit sharing ratio. What does this mean? Existing partners mean old partners, meaning the revaluation of assets should be shared always among the old partnership. It won't be fair for the new partner to gain or to benefit on the hard work of others. Do you understand?
Yes.
So revaluation of assets should always be allocated to the existing partners, not the new partnership, to the existing partners. In other words, to the old partnership in their existing profit sharing ratios. Why? This is because the existing partners must benefit or lose from changes in the value of equity while they controlled the business. So the new partner was never in the business, so he cannot benefit at anything. Are we together? Are we together?
Yes, Sarah.
Okay, I hope we all understand. So when you have whether it says that assets are revalued after admitting the Besho, make sure that when you admit, because assets are always revalued during the day of admission, So you need to share the gains or losses among the old partners using their old profit sharing ratios. Okay. So we said it's a loss, right? So the capital, this is the loss made. So the loss will be divided shared among the old partners. So we have Tom. Tom will have we said it's 12,600, right? Am I correct? 12,600. Is that the
Yes.
loss made?
Mm-hmm.
Okay, using the old partner, using the old using the old profit sharing ratio. So that will be Tom 4/7. So what is Tom's profit? I mean loss share. How much will Tom's capital account be allocated with?
7,200.
7,000.
200.
So 12,600 times 4/7 will give us 7,200. Are we getting the same amount?
Yes.
Okay, and then we move on to capital Dick. So capital Dick will have how much?
5,400.
5,000.
400.
5,400. Okay,
But
and then this will be debtors. So we'll credit our debtors because our debtors are actually decreasing. Debtors is an asset. Asset decreases on the credit side and they have lost in value. So we decrease our debtors with 12,600. Any questions?
No.
Okay. And then we move on. We are done with debtors. We move on to number 3. A general reserve of 24,000 should be disclosed in the new books of the partnership, meaning it is to appear in the new books of the partnership. Currently, in this new partner, currently during the admission of Tebeshone, there are no general reserves. The general reserve of how much? Of 42,000, sorry, not 42, of 56,000 was already distributed. Ne? It was already paid out. You understand? So we need to establish a new general reserve, meaning that each partner needs to give a certain amount that will be transferred to the general reserve because we need to show, or we need to disclose a new general reserve in the new books of the partnership. In other words, if it says general reserve should be disclosed in the books of the new partnership, you need to debit your partner's capital accounts. That's what it means. To be disclosed in the new partnership, you need to debit your new partner's capital accounts. So in this case, because general reserve is to appear in the new books of the partnership, so the new partner is also involved. Ne? He also needs to pay a certain amount for general reserve. So you have capital. 40 minutes left, okay. I mean 10. Capital of Tom, how much will Tom give? So we are told that the total general reserve that to be disclosed is 24,000. So how much will Tom give? How much will we debit Tom's capital account with? And then we have Dick. And then we have the Besho. How much? Guys,
10,971.
10,000?
971.
971. So which profit sharing ratios are we using of the new partnership, which is now in you are told is 24,000. You multiply with 16 over 35. The new part,
35.
the new, yes. And then Dick, how much will Dick get?
8,229.
8,000?
229.
229. And then Tebesho?
4.8.
Times, okay, 7 over 35. You said it's 8,000.
4.8.
Or 4,800. Do we understand?
Yes.
And this is we credit our general reserve. General reserve is a what? Is an equity. Ne? It's an equity. Equity increases on the credit side. It's an equity like capital. Equity increases on the credit side. Therefore, our general reserve is increasing in the business. So we need to credit it with 24,000. Okay. So we move on to the last thing. Ne? We have 7 minutes, so we'll do our goodwill, and then then we'll start a new meeting where we'll do our question 2 of the statement of financial position. Okay. So goodwill in this case, we are told that goodwill will not appear in the books of the new partnership. Ne? Goodwill will not appear in the books of the new partnership. Meaning, what will we do? Meaning, if goodwill will not appear in the books of the new partnership, it needs to be distributed. Are we together?
Yes.
Okay. So the first thing that we need to do is we need to calculate the total goodwill. We need to calculate the total goodwill. So the total goodwill in this case is how much? If goodwill is not to appear in the new books of the partnership, so we need to debit our capital accounts. So how do we get our goodwill? How do we get our total goodwill? Anyone who wants to try? Anyone that wants to try?
We multiply the 11,760 by 5
times 5. In other words, ne, you take your goodwill, you are told that you will pay goodwill of 11,750, ne? And then you divide it by his profit sharing ratio of 7/35. So you get his total. Whenever you're looking for either total contribution or total goodwill, sorry, not 7/5, 7/35, sorry. 7, it's over divided by 1/5. So whenever you want to get your total contribution or your total goodwill, you take, now we are dealing with goodwill, you take your goodwill amount, which is 11,750, right? Goodwill of 11,760, and then you divide it by his total interest, which is divided by 1/5. His total interest was, he bought interest of 1/5. Therefore, his total goodwill will be 58,800. Are we together?
Yes.
Is it making sense, guys?
Can you repeat again?
When you are calculating your total goodwill, your total contribution, eh? Now, for goodwill, you take your goodwill that he paid, which is 11,760, and then you divide it by the total interest he paid in the business, which is now 11,760 divided by 1/5, because he bought interest of 1/5 in the partnership. Then you will get how much? You will get 58,800, which is the goodwill. Are we together? So
Divide it with 1/5 for 7/5.
What he bought interest of 1/5. The 7/35 was 7/35 is actually the same as 1/5. His total interest in the business was 1/5. So you should use that. The 7/35 is the profit sharing ratio. while the interest, he bought interest of 1/5 in the business. And when you are calculating your total contribution or your total goodwill, you need to use the interest that he bought, which is 1/5. He bought interest of 1/5, so you need to divide by 1/5.
Okay.
Are we together?
Yes.
Which is actually just the same, because I tried again with 7/35. 1/5 is the same as 7/35, so it will give you the same answer in the end. So we move on. We said that we debit our capital accounts. Capital Tom, how much will Tom get? So 58,800 should not appear in the new books of the partnership, meaning that you will have to debit your capital accounts. Should appear in the new books of the partnership to credit their capital accounts. So capital Tom, how much will you get? 16/35. Capital Tom is how much?
26,880.
26,880.
80.
And then Dick,
20,160.
how much?
20,160.
20,160. And Tebesho?
11,760.
7?
11,760.
11,760. Do we understand? Are there any questions?
No.
No questions?
Please.
So we only have
No,
less than
Sarah.
we only have less than a minute.
Okay.
We only have less than a minute.
Please explain. I'm kind of confused. The